Welcome back to another video. Today we have none other than Steve Penny. He is our regular market analyst, researcher, and update every single Friday on your investments, on the economic and financial systems, on precious metals, gold, silver, mining stocks, uranium. And this happens every Friday to deliver the most value that we possibly can to you. So if you enjoy this and you like having Steve on, give us a comment right there down below and let us know that you enjoyed this. Give us a comment down below, hit the like button right over there, and right over there, that's the other way you can let us know that you enjoy this. And last but not least, be sure to support Steve's work. Right there down below is the free newsletter called Silver Chartist. The reason I had Steve on is because I went through the free newsletter and I was blown away. I said, Steve, this is better than most people's paid newsletter. This free alone is going to be worth a lot of money to folks. And I said, can you come on and do a regular market update for us? And so that's what we're going to be discussing here in this video. And I want to encourage you to sign up for free to Silver Chartist in the description and pinned to the comments right there down below. That's Steve's newsletter.
All right, guys, Steve Penny here. Today is Friday, May 7th, 2021, with another brief video update on Jake's I Love Prosperity channel. The plan is to do these every Friday, where we take a look at my three favorite metals, which are silver, uranium, and gold, and take a look at the charts, take a look at the week that was, and try and anticipate what we might expect in the week ahead. We'll also talk occasionally about my other favorite commodities to track, which are copper and nickel and platinum. You know, I think a lot of generalist investors and the market is starting to wake up to this inflation narrative and starting to turn their eyes towards the value that is currently being presented in commodities. Well, when you drill down a little bit further and say, well, yeah, commodities are undervalued, but what are the most undervalued commodities? And I'm convinced that the most undervalued commodities are silver, uranium, and you could also make a case for platinum. And that's what we are laser focused on at Silver Chartist. So with that said, let me go ahead and pull up some charts. So we'll start off this week by taking a look at a chart for gold, and we'll kind of work big to small by starting with a long-term 10-year chart. These are monthly candlesticks, so every candle here represents 1 month. And what we see here is a very, very bullish pattern. This is a cup and handle pattern where you see a big cup right here, and then this kind of looks like a handle, right? Well, these handles typically retrace or pull back about maybe a third of the previous run, and that's exactly what we got, and we're just starting to turn around. And this week we did break through this $1,800 level, which was resistance, and now that's support. So things are starting to look up for gold. And as we zoom in just a little bit here, we see this 8-month downtrend channel that you can see right here. This is very clear resistance. The institutional trading algorithms are going to be watching this line. Now, this line happens to closely coincide with the 200-day moving average, which we'll see here in a minute. And we've also got this 18-month uptrend line, which serves as strong support. And I think a reasonable scenario here would be that we maybe back and fill just a little bit here before breaking out. Now, is it possible that we just break right above this line here? Yeah, absolutely. That's certainly possible. But I'm looking for a little bit of backing and filling below this line for maybe a week or two prior to a breakout. However, regardless of when the breakout happens, whenever it does happen, that's going to signal a major trend reversal and will be very bullish for the price of gold. Let's zoom in here on the daily chart, and we can see this 8-month downtrend channel with a little bit more fidelity and clarity. And we see the price came right up to this 200-day moving average and the upper rail of this downtrend channel, and that's resistance. So like I said before, once we get above that, that's going to be a very bullish development from a technical perspective. If we do pull back a little bit from here, I would look for initial support at this little green uptrend line. And then this blue line here is the 50-day moving average. That's our next level of support. And then we've got big support here at this 2-year uptrend line. What's also really encouraging here for gold is you come down and you see volume. This is really nice volume coming in, and that shows big money and institutions are again beginning to accumulate this sector. Turning to a big picture chart for silver, this goes back 40 years to 1980, and what we see here is an even bigger cup and handle pattern than we saw for gold. And the obvious resistance is right here around $30, and once we eventually get through $30, $50 becomes the intermediate term target. Now, a lot of people think we're going to get towards $50 silver and that'll kind of be the end. I think getting through $50 silver will just merely mark the next phase of this bull market, and I think $50 will eventually be looked back upon as cheap. Now, some people may be frustrated and say that's ridiculous to say because here we are down around 27 and change, and I would agree. Let's get through $30 first. $50 then becomes the intermediate term target. But from a longer term time horizon, if you're looking 4, 5, 6 years down the road, I think we're going much higher than $50 silver. When we zoom in here on the daily chart, we see price above a rising 200-day moving average. That's very bullish. Typically, institutional trading algorithms are in a buy the dip mode when price is above a rising 200-day moving average. Conversely, if price is below a declining 200-day moving average, those algorithms tend to sell the rallies. So this is a bullish technical posture for silver right here. And like we just said, the big resistance is up around $30. To be very specific, $30.35. That was the spike high on February 1st of the first silver squeeze push. Here's a chart for SILJ, the junior silver mining ETF. And even though junior silver miners have outperformed this last year, they've been the leading component of the whole precious metal sector, they still continue to be the most undervalued component and have the most upside potential for those who can handle the added volatility. And this is a long-term chart here going back to 2013, so about 8 years. And we can see we've came up and tested this little downtrend line, or I should say big downtrend line, a couple of times. And we kind of got through it a little bit on February, but quickly fell right back down. So I think a convincing break above this red downtrend line, when that happens, will be the start of something probably pretty big in the junior silver miners. When we zoom into a daily chart here, we can see again price above this rising 200-day moving average, and then we've got this very clear green uptrend line. That's obvious to everyone. I've been personally accumulating for my retirement account every time we come down and test this green uptrend line. And then the big resistance is this little area between $17 and $17.63, which we're approaching right now. Let's take a quick look at the gold to silver ratio going back to 1980. And as I've said before, just understanding this simple chart can really help to amplify your gains over the course of this precious metals bull market. And going back to 1980, we see we had a 15-to-1 gold to silver ratio. And I think we're very likely to meet or exceed that ratio on this current bull market in the fullness of time over the course of the next few years. Well, back in March of 2020, we reached an all-time high of 123-to-1. And since then, silver's outperformed gold by almost a factor of 2. But there's still a lot of room for silver to go here and outperform gold. And you can see if we just went back to this 15-to-1 ratio, silver would outperform gold by a factor of 4. And even if we just went back to the ratio we saw in 2011, well, silver would still outperform gold by a factor of 2. So clearly there's much more upside in silver at the current moment. I decided to include a couple charts of my two favorite battery metals this week, which are copper and nickel. And here's a really long-term chart of copper going back 20 years. Each candlestick here represents 1 month. And what we see right here, right now, is price breaking out to a new all-time high in copper. That is very bullish. We also see big volume pouring in. Now, on the other hand, if you come up here to RSI, that's a good way to measure just if something is overbought or oversold. So we're way above this red line. Anything above this red line here, 70 on the RSI, tells you you're getting a little bit stretched technically. And you can see the last couple times we've been up here over the last few years, couple decades really. It has preceded some weakness, so I wouldn't be surprised at all to see some backing and filling or a little bit of a pullback in copper. However, over the long term, we're very bullish. And it's important to look at things in context. So with so much liquidity just being pumped into the system these days, literally almost everything is going up. So ratios become even more important. And when we look at commodities compared to stocks, on a relative basis, commodities are extremely cheap, and so is copper from a long-term historical basis. Here's a chart for nickel, my other favorite battery metal, and we see price sitting just above this rising 200-day moving average. And if you're looking for a couple of battery metal stocks, or copper and nickel stocks, we do cover those in our weekly report. All right, turning to uranium miners. Uranium miners have just been on fire the last few weeks. Now, my contrarian nature does not like to chase any sector that's up 300-400% in the last year. However, the supply-demand fundamentals suggest that we are still in the very early innings here of what is, I expect, to be a major bull market in uranium. Now, could the miners just be a little bit ahead of themselves here? Yeah, that's certainly possible. But I personally wouldn't want zero exposure here. Of course, I don't give financial advice, because this market is so small that it could just keep running to the upside and stay overbought. Last I checked, there were only about 65 uranium miners in the world, and they all have a very small market cap. So when big money pours into this sector, you typically see fireworks to the upside. Looking at the actual spot price of uranium, which isn't quite as relevant as some people might think, because most of the price is set on long-term contracts with utilities. However, the spot price, I think, is important to reference just as a gauge of sentiment in the sector. And we see price rising nicely here within the confines of this 4-year uptrend channel. Here's a chart for URNM. This is my favorite ETF to track the uranium sector. And this is a weekly log chart. And we see price getting right near the upper boundary of this clear uptrend channel. We also see price breaking out to new all-time highs. And then whenever I see a breakout, any kind of technical breakout, my eyes come down to the bottom of the screen and I want to see, is it being confirmed by volume? And sure enough, here we see the largest weekly buying volume on record. And again, that tells us that's big money coming in. And big money in institutions, they're not short-term traders. So they look to accumulate positions over time. They're not looking to get in and then get out next week. So this is healthy. This is a sign of accumulation, and big money is starting to see what's happening in this market and how wildly bullish the supply-demand fundamentals are. When we zero in just a little bit on the daily chart for this ETF, we see that we just had a clean breakout to new all-time highs, again on very good volume. Now let's look and see if we get a little back test of the breakout level. That's what I'd be looking for. We are getting a little bit stretched on the RSI here. So a little bit of backing and filling here would not be surprising, and that would actually be healthy for the overall trend and for the overall bull market. And last chart of the day, guys, is Cameco. Cameco is kind of the blue chip of the uranium sector, and we see price breaking out to a fresh high. It's not an all-time high, but it's breaking out to new highs on this really bullish candle on very good volume. And you could even call that a bullish engulfing candle, which just adds confirmation to this breakout. All right, guys, hopefully you find these videos helpful. Leave a comment down below. Let me know what you think. I'm always open to constructive feedback. We want to make these weekly videos as the best that we possibly can. Look forward to visiting with you next week. God bless.